Hey guys, DJ from PTA going over July 26 trades. July 26 was pretty choppy for me, basically because I was getting in and out of the same stock. I broke one of my rules. One of my rules in trading is never trade a stock more than 2 times. So if I trade a stock and I'm wrong 2 times, I typically don't trade it again. But today I broke my rule. Not to any avail. It's not something I do often, but I knew I was seeing it incorrectly, and when I saw it right the third time is when I actually took the trade. So want to go down with that. I was actually down about 7,200 a day, and I'm climbing out of that for 3,400 win for the day, and we're gonna go over that trade. Now the SPY has been doing what I thought it would do, as I talked about in other previous videos. Go ahead and click the subscribe button on that tab just so that you don't miss any of these videos. But moreover, you can go back to the library and check out that video of me talking about the SPY. So ultimately, I was looking for this bounce. We talked about that. I told you it should get here right around that weekly area and then maybe pull back. So this is the type of move that I would be looking for, and then get a continuation on out this way. I would like to pull back a little bit more. The fundamentals look like it would allow it to do that, but it also, based on the chart, we could be in a reversal or pinning towards an uptrend. So this one here in particular, how I feel about it, this is one of them trades where I tell people to be careful. Be careful with playing with the SPY right now. Maybe in the next week or so, we'll see some different type of price action coming into August. But yeah, right now I'll be playing it safe. Wait till it confirm if you're doing a long-term bias. If you are doing a short-term bias, I definitely would advise to just pay attention to the price action on that. All right, so the stock that we're gonna go over, the one I kept butchering over and over and over, was Siga. I'm gonna go over that one, but moreover, I want to discuss Ayla. Ayla was a loser on the 26th for me. It failed. Just got in the wrong spot and everything, but I want to go over that trade with you guys. So one of the things I want to go over is, everything deals with timing. So Ayla was one that popped up on the scanner pre-market. I was looking at it, had decent news, looked at promising. It actually gapped up on the stream volume, 101 volume. Now, also, you got to remember that this had a pretty low float, had a 14 million float, shares outstanding. So with that being said, that made this something that everyone was looking at. I personally feel like this stock was real crowded. And that's the reason why it just didn't really move or do anything significant of that choice. So my goal on it was to play it and, of course win, but looking at the key areas. So one of the key areas was here. And then you had this little conjunction right here after what we call previous month high at 201. So it kind of just was it didn't have a lot of range. It was a lot of things with this stock that just, I don't know. I played it because it wasn't too much out there, and I was trying to see if it's something I can do, but it really didn't play out the way I thought. But breaking it down 30-minute, we came up off of this pullback off the key area 159. 159 was the ideal entry. I typically like to see a stock move first on the up and pull back and then continue on. That's what I was looking for. I had actually gotten this trade a little late. And basically 211 was my entry. Now I want to put this on the chart so you can kind of see. Let's break this down to the 1 minute. Now the thing is that it looked good from the 1 minute, and I was using this as a bias, this area here. So I thought this pop returned back to 201. Remember, 201 was off of the big time frame, so we just put that down to 2. So that being the big area, I figured with this pull back down, rejected, and then a pull, it should be good. So I jumped in about right here at 211. I mean, it went up to 225, pulled back, and then got me out. So where it got me out at was the key to why you respect your risk. I think I got out 197. So that's what started off the day being a pretty rough day, because I loaded up here. So I pulled back, and then it got me out 197 and act like it wanted to pull on, and then it kind of just faded. I didn't like the volume cues on this, so I just didn't decide to keep playing it. But that's pretty much how that trade went left. Honestly, just missed the play. And this is what you're talking about, like when you review and go back and look over your stocks. Really, I just missed the play. The play was here. It bounced, broke out, held, and then when it returned right here, this is pretty much the area that I should have got in at, which was right here. I just missed the play, and I mean, it would have been a tighter risk, more of a gain, but I legitimately just missed the play. And instead of me just taking it and moving on, I was trying to join, caught a little Fomo, and honestly, that's probably why that trade didn't play out as well as it should have. Just a missed opportunity. So rule off of that is, a learning lesson from that is, if you miss the opportunity, just miss it. Keep going. Look for a different play. Look for a different stock. Now, circling back, the one stock I told you I played it multiple times was SIGA. Now, SIGA was it was a bit of a FOMO trading. So what the psychology behind it was that I had already lost on AYLA, so I'm going to play, and actually I played SIGA first, then I lost on AYLA. I basically placed those trades at the same time, but the AYLA took a little bit longer for me to get out. So we're talking about, looking at the timestamps, almost an hour. I got in at AYLA at 11:02 p.m. a.m. Eastern Standard Time, and then I got out at 11:51 Eastern Standard Time. So again, that was probably like an hour of sitting in the trade, seeing if it was going to pull away, but it just didn't. And that's where we ran into some issues. So that was pretty much how that went, how that particular trade went wrong. Now, SIGA was a situation where I jumped in a little bit early. My first entry, and again, we were coming into new areas or new territories, so everything was based off the previous day or momentum type of trade. So I end up, break this down to the 30 minute, I end up getting chopped out of it. So when I got chopped out of it, and you can see the 30 minute was moving in a certain direction. It was real tight. A lot of price action, real tight. I got chopped out of it. First trade was 1693. So let's draw a line at 1693. So ultimately, I got chopped out of it right here. So it pulled down, found some support at 1650. I think that was support. Yeah, it was 1650. And that played a key area because it broke out, pulled back, bounced, and then pulled back and started creating higher lows. I got in a little early. What I mean is timing on this was a little early. I should have waited, but I jumped in. I think it was just the edge of the market and everything like that. I jumped in and went to 1693, went up to 617, and because I was not up in the other trade, I took a little off. It pulled back, got me out. I broke even on the rest. So small gain at first. That was the first trade. I'm still down because I'm down on the AYLA trade, and that was the first trade. Now, again, because I was looking at it and everything, I end up getting back into the trade at 1685. So let's go here, green, 1685. So first time I got in here, got me out. Got in here the second time, took a little off, got me out. And then I eventually took the trade at 1712 was the last trade, which was here. It went up, took some off, it pulled back, and then I just left the rest holding. So the rest of it I rolled out for the rest of the day. So that trade is what made me green for the day, and it pulled me back out of the red and made me green. So again, at 1885 is where it ended up hitting the high. But this is where, when you're trading, you have to have certain criteria and stick to them. So this wasn't necessarily a good day. This is one of those trading days that you have to be respectful and biased as to what you actually did. Be honest with yourself. Just because you got a green day doesn't make it a good day. It just wasn't a good clean trade. It wasn't clean trading. I didn't wait for it to manifest. I jumped in, FOMO. I'm down a lot on the other trade, and that's when the best of you will get to you. Now this one, it played out pretty well, but ultimately wasn't a solid trade. Not something that I would advise others to do. So the beautiful thing about trading, going over the videos and doing this for you guys, I have to check myself when it comes to different plays that I play that don't make any sense. So me playing this 3 times did not make sense. Broke rules. Should have just took my loss and kept it going. So lesson I can tell you I learned from this is that rules are put in place for a reason. Now, yes, I respect my risk on each one of the trades, but my rule of not trading more than 2 times. And the reason for that is because if you're wrong 2 times, that means you need to take a step back and take a look at the market because you're seeing it wrong. So I hope that helps you guys understand that even though this was a green day, this wasn't clean trading. And I wanted to make sure I discussed that with you guys. All right, gang, if you have any questions, concerns, leave it in the comment section. Make sure you subscribe. Make sure you hit that like button so YouTube algorithm can throw us in there. It really helps out a lot. And also get this information out to other aspiring and new traders. And guys, you guys got to jump in that Discord. It's great information there. It's steadily growing. We're getting new people in there every day. So I greatly appreciate you guys' support, and I'm hoping that we're adding some value to the trading world. All right, guys. Till next time, stay studying and stay focused.